The one nice thing I would say about Bitcoin so far with this dump is that where I would be concerned for Bitcoin is if it were to go back down to. I also don't fully buy into the ideas that there's a floor for anything because anything can happen in the market. Yeah, if you're sitting here in August and Bitcoin is still not taking out that high, then I think it would be hard to be optimistic at that point, right? Because normally in Bitcoin bull market.
Benjamin Cowen is the brain behind Into the Cryptoverse, where data meets crypto. With a PhD in nuclear engineering and a sharp eye for market trends,
he's built a loyal following by breaking down complex financial data into clear, actionable insights, especially on his YouTube channel.
I think you're still better off with Bitcoin than basically the entire altcoin market, right? Like Bitcoin will continue to outperform the altcoin market. And so in order for ETH Bitcoin to bottom, we have to see a big pivot in monetary policy, right? And at the very least, we need to see quantitative tightening end. But one counterpoint is you don't have to have QE for all Bitcoin pairs to go up because at the end of the day, the bears sound smart and the bulls make money is usually what happens. I think for me, like as an investor, the way that I've thought to play this whole thing is that that's the way to ultimately be successful in crypto. I think the people that do best in crypto are the people that.
Hey guys, welcome back to Less Noise, More Signal. Today I have Benjamin Cowan with me. Hey Ben, very nice to have you with us.
Pleasure to be here. Thanks for having me.
Yes, so you are from Into the Cryptoverse, one of the biggest channels out there, I would say, on YouTube, on X, and just really interesting stuff coming from you. I feel like usually it's there's like an inverse relationship between the amount of followers that somebody has and then the alpha that somebody is sharing. But with you, this is not the case, because I feel like you have a big account, but you're still sharing a lot of very, very interesting information. And so it's very cool to have you with us today. So thanks for doing this.
Yeah, I mean, I do appreciate that. As everyone knows, I do get things wrong, so I'm not immune to being wrong about certain things, and I've been wrong about things, and I'm sure I'll be wrong about things in the future. But I do at least try to be right.
Yeah, I know that's for sure. No, but it's just usually if you have people with up to 1 million followers or something, I mean, it's just like the usual. It's more entertaining, and people are posting from conferences, and you do share actual stuff. You go into the details of like different trading pairs and all these different things. So that's quite helpful, and I think a lot of people appreciate that for sure. Yeah. Cool. I mean, I want to do some of that today, maybe as well, and just feel if you ever feel like sharing something, you can go about doing this. But I mean, I want to start just with something that you've talked about as well. It's this infamous death cross. With the Bitcoin market. I mean, we have people, or I've seen a lot of people post about it on X and social media, and they have been warning about it. And if you could maybe explain to us what is a death cross, and then also, why have people been warning about it?
Sure. Okay, let me try to share my screen here. All right, can you see it just fine?
Yes, I can see it just fine.
Yeah. So the death cross essentially is when a shorter term moving average goes below a longer term moving average. So basically, the short term price action is really starting to underperform. And we've actually had a death cross every year for Bitcoin so far this cycle. We actually had one in 2023. We had one in 2024. And now we've also had one in 2025. And what I said about, a couple weeks ago was I said to expect a dump before the death cross, right? So I put out this video in early April. And the reason I put it out was because I noticed a lot of people were saying that Bitcoin had decoupled from the stock market. And usually when people start to say that, Bitcoin then dump itself. And so what I was looking at, I was just looking at the last few death crosses and also ones from prior cycles. And there's this uncanny relationship or uncanny thing that happens is where it typically goes down just before the death cross, like in 2023 and in 2024. And then even in 2019, which is another good example that is relevant to talk about, right? But you can see how Bitcoin will sort of dump ahead of the death cross. And so then what happens is when the death cross actually occurs, it ends up marking at least a local bottom, right? So in 2019, it marked a local bottom. So if you panic sold on the death cross, Bitcoin then ripped up, from like 7K all the way up to over $10,000. It did eventually go to set a new low, right? It did eventually go down and set a new low, but usually death crosses at least mark local bottoms. Even in 2021, we had a death cross, and you can see it was pretty close to a local bottom for Bitcoin. Again, we did eventually take that low out, but it does go to show you that, when the headlines occur and people start talking about a death cross on the day of it occurring, it's usually because they're scared, they're nervous, they panic, and so they sell into the death cross. And then what normally happens is that Bitcoin gets a rally on the other side of the death cross. And that's essentially what we've had right now. Now the question, this was the easy part, right? Like the easy part, I think, was just figuring out what would happen going into the death cross, normally a dump. What would happen going out of the death cross, normally a rally. The hard part now is figuring out if it's just a counter trend rally to a lower high, like in 2019, or if it actually leads to, a higher high, like 2023 and 2024. So that's really, I think, what we're mostly, thinking about in terms of the death cross is that, like, there's almost always rally after the death cross. What we're seeing right now is actually par for the course, even if we do go to set new lows. So then the question is as well, what sort of awaits us further out from here as we get beyond that death cross rally.
Yeah, sure. That makes a lot of sense. But then, as I understand you, it doesn't automatically mean that even just because we've seen a death cross, as you just were explaining, that this will usher in definitely some sort of Bitcoin bear market. This doesn't have to be the case. And sometimes I got the feeling with a lot of people who have been sharing this, they were like, okay, if this is if there's gonna be a death cross, there's gonna be the final nail in the coffin, and Bitcoin is really gonna enter this bear market. But this is there's no 100% correlation there, right? It doesn't have to happen, as I understand you.
Right. Well, I mean, even in 2021, there was a death cross, and we still managed to ultimately go to a new all-time high in the fourth quarter of the year. Nothing's a sure thing, right? I mean, right now there's sort of a web of possibilities, all with certain probabilistic outcome. And a lot of it's dependent on things that we just don't have the answers to yet. The one nice thing I would say about Bitcoin so far with this dump is that I think you could argue that as long as Bitcoin stays above, as long as it really stays above the 2024 high, and even if it were to wick down to the 2021 high, it still seems structurally strong, right? Like it still seems like it could just be par for the course. And so because this recent dump into the death cross did not go below this, I would even say it could go into this level and still be okay, right? Like I feel like it could go as low as 69K on a wick. I wouldn't want to see a weekly close below 73. But I would say it could go down there and still be realistically okay. And the reason why that's important is because if this is 2019, where you do get sort of a lower low about a month later, which is what happened, and then this is the recession, right? The recession was over there. If you do get a lower low, that still leaves some flexibility for Bitcoin to maybe find support in this area later on this year, if this is not sort of like the yearly low for Bitcoin. For the year. So yeah, like I think there's always reasons to sort of try to be optimistic. At the end of the day, the bears sound smart and the bulls make money is usually what happened. I think for me, like as an investor, the way that I've thought to play this whole thing is that if it's a left translated cycle and the top is in, then it made sense for me to sort of be at around like 30% cash in case it's a left translated cycle. And I think that's the important thing, is that a lot of people are on one side or the other. They're like, well, either the top's in or it's not. And obviously January 20th I said many times we're likely going to go down for a while because we were pricing in perfection with the strategic Bitcoin reserve and Gary Gensler resigning and deregulation. And a lot of what people thought was going to happen didn't actually happen. And so to me, it always made sense to see a drop in, the sort of the beginning part of this year, just as a part of a de-risking process. And so I think by having about 1/3 cash in my mind gives you flexibility, right? You're not fully committed to either outcome. You're hedged in case it's a left translated cycle, but you also still, can get exposure to the upside. And I do think if you're in crypto, I think you're still better off with Bitcoin than basically the entire altcoin market, right? Like I think Bitcoin will continue to outperform the altcoin market until quantitative tightening is over. Where I would be concerned for Bitcoin is if it were to go back down to that trend line, right? Like if it were to go all the way back into the low 60s, the good news is if we just woke up one morning and Bitcoin were down here, the good news is you would likely get a really big rally off of that level. The bad news is I probably would operate deterministically at that point and assume the top is in for the cycle, as I've said many times. So for me right now, the way I navigate it, because like there's always sort of like the what do I think is going to happen? But I think what can be even more helpful is say like, look, no one actually knows. You need to have a strategy so that if either outcome happens, you're not just sitting there stressed out, worried constantly about what you're doing. And that's why last week I said, look, guys, it does not make sense to sell into the death cross because normally we get a rally after it, right? So if you do feel like you need to de-risk, wait until the death cross rally and then sort of take those steps.
Yeah, that's also a great advice, so to say. I mean, that's what I was going to ask. Obviously you can't give any financial advice because nobody knows. But I'm still like wondering if, like, as you said, de-risking would have made sense maybe in December. Like when we were talking about the SPR and everything. But let's assume that some people have maybe not taken this advice and have not de-risked, and now we're at sort of 85K-ish, and Bitcoin is at that level, and you're telling us, okay, there's this possibility of it going down to 69 even, and that if that level were to hold, it would be great. How does a person have to go about now? Like if they haven't really sort of de-risked, is it still time to de-risk? Is that still a good strategy, so to say, or should they just stay and like, yeah, what's sort of your view there? This show is brought to you by NewHedge. In a market driven by complexity, insight is everything. NewHedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicators, live derivatives data, and adoption metrics, NewHedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, NewHedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL.
My answer last week would have been no, wait, because I had a lot of people reaching out last week panicking about, what doesn't make sense when Bitcoin went to like 64K and then it was at 76K. I remember. So we had the death cross and then Bitcoin then dumped again shortly after the death cross to a higher low. And a lot of people reached out and they're like, look, is it time to de-risk if we missed doing so back in January and February? And I said, look, my opinion is that last week's not the week, right? If you're going to do it, wait until death cross rally at the very least. This week is better than last week. And I'm not saying that it can't go to a new all-time high, but the reason it's better this week than last week is because you can do it from like a less emotional perspective, right? You can do it from like, you're not as emotional. The problem with de-risking into a drop is that usually it puts you in a position of weakness because then the market then rips higher right after a lot of people sell into the death cross. So you want to avoid that. So if you are going to de-risk, sort of my base case has been that, and I could be wrong about this, my base case is that if this is a left translated cycle where the top's already in, right? I would expect a sort of a macro lower high around August is what I'm thinking. Around August, around the third quarter of the year. So yeah, I mean, like, look, for me, I think it makes sense to be about 30 to 35% cash, right? It's like somewhere in that ballpark. That way you're hedged. But if Bitcoin goes down here, I probably would reduce my cash position and get more Bitcoin, but then I would probably be a big seller of it if there were a counter trend rally into the third quarter of the year. So my base case right now, my sort of thinking is that, about 1/3 cash makes sense. And it has made sense for the last 3 to 4 months. I mean, in fact, if you look at, I have this tool called Modern Portfolio Theory. And so this is a great thing. Like, I'm not just making this number up. If you look at modern portfolio theory, so the portfolio consisting of, say, Bitcoin, Ethereum, and US dollars that maximizes your risk adjusted returns, your Sharpe ratio or your Sortino ratio, it suggests either 30% USD or 33%, right? Depending on if you're trying to maximize the Sharpe ratio or the Sortino ratio. Now, the main difference is the Sortino ratio does not punish positive volatility. So I actually prefer the Sortino ratio. But this is where the numbers are coming from. Like, I'm not just making up a random number and saying, oh, 30%. It's basically, look, 30 to 33%. That maximizes your risk adjusted returns right now. And given the fact that we have seen left translated cycles in the 70s and when we had high inflation, that feels about right. And if we're out in Q3, if it's the third quarter of the year and Bitcoin has still not taken out this high, and especially if you're on some type of counter trend rally and people are feeling pretty good, and it still hasn't taken out that high by the third quarter, it probably won't, right? It probably won't if it can't do it by then. So that's how I would navigate it. I mean, it could make sense to make sure you have some cash now. And maybe it just makes sense, if you're already, and you don't want to panic sell, maybe you just hold off the DCA for a little bit and build up a cash position in case Bitcoin needs to drop. And then if you're sitting here in August and September, or let's say August, because I think September is probably, could even, that might end up marking a local low or something, because September is normally bad for Bitcoin. Yeah, if you're sitting here in August and Bitcoin is still not taking out that high, then I think it would be hard to be optimistic at that point, right? Because normally in Bitcoin bull markets, you don't go that long. And last year, my base case was that it would be about a 6 to 9 month low before getting a rally to a new high. The reason why this year I would be more skeptical if it takes that long is because then we're before too long, we're going to have 2026 in sight, and if you do operate deterministically around Bitcoin and assume that we're in 4-year cycles, 2026 is a bear market year, right? Because 2014 was, 2018 was a bear market, 2022 was a bear market. All the midterm years have been bear markets. So I'm kind of operating deterministically in that sense of assuming that 2026 will be a bear market. And the main question is what is left for Bitcoin this year? And I will try to remain as optimistic as I can as long as Bitcoin is above the 2024 high. But below, I'm not saying you should wait for Bitcoin to go below that before you hedge at all for that outcome. What I'm saying is if it goes below that, then I would probably say, yeah, we're probably going to bounce, but it'll be a lower high. If we stay above that, there's always hope that it can go to a higher high.
Yeah, no, I see that. That definitely makes sense. I mean, in terms of what could push Bitcoin below this 2024 high, is it really only a potential recession, in like rather macro terms that could push Bitcoin below this, or is there any other thing that we would have to keep in mind? And if so, like in terms of recession, you see that coming as well, and then how would Bitcoin perform in a recession? Would that then mean, okay, now, yeah, the left translated cycle is definitely confirmed, and that's why it wouldn't do well at all, So because that's something I think people are also trying to wrap their head around.
Well, you can have recessions where the stock market drops 20%. And by the way, the stock market has already dropped 20%, right? Like, so there's a chance that we're in a recession now. Like, I wouldn't say that it's like my base case, but again, if you look at the Atlanta Fed projections, like if you look at let me pull this up really quick so I can share it with everyone. But yeah, like if you look at the Atlanta Fed, I mean, they're right now they're projecting that Q1 GDP is going to be negative 2.4%. And this isn't just a fluke, right? They've had several data points down here, and they tend to be pretty accurate, especially this late, because they only got like 2 more weeks of revisions before it's kind of set in stone, or at least what it's going to be until, say, a future revision. There's a chance that the market, there's a chance that we're just simply in a recession right now. And if you look at the S&P 500 and you just look at prior recessions, right, there are plenty of examples where the S&P drops. Like, I mean, there's obviously the 50% drops, which is what people fear, right? That's what we really don't want to see. But there's plenty of recessions that are 20% drops, right? Like the recession in 1990 was a 20% drop. The recession in 1980 was a 20% drop, right? So you could have an example like this, right, where we are in a recession right now, and then we come out of it, and then we just get another recession in 2026, right? That's what happened in the 1980s. By the way, those were 2 years where they actually got inflation under control, right? Reagan took office in 1981. There was a recession. Volcker did what had to be done, and then it just set up, this massive expansion that eventually we ultimately got. So look, yeah, like there's a chance that we're in a recession right now. And if we are, you kind of have to commend Bitcoin for doing as well as it has. I mean, obviously there's always the other view that like, well, it could always drop later on, but relatively speaking, the S&P 500 has already dropped to the 2021 high. And for Bitcoin to do that same thing, it would put it at, right, 69K. Right. So that's kind of that level. I think as long as Bitcoin stays about that, I want to show you one more thing before we move on. And it's with respect to the S&P. The S&P 500 divided by M2. I've been watching this level really closely over the last couple of years, because this level that we got rejected off of was the same exact level that we got rejected off of in 1998. Right. And right, this level down here that it just bounced off of is the same level that it bounced off of right here. It had a very similar drop, right? The S&P dropped back then. It dropped over the same time period, right? It was about, 2 months or so. It dropped 21%, right? 21%. It then went back up for a few weeks, right? And you can see this red dashed line across the screen. The rally that the S&P is in right now is basically right around the level that rally stalled out. It then came back down, swept the low, right? It swept the low and then got another rally after that. So if the S&P does fall back down here and it say sweeps this low and it goes a little bit lower, right? So if we extend that down, that'd be about a 24% drop instead of 21%. That is how Bitcoin could potentially go down to, say, 69K or 73K if the S&P were to get another drop sometime like in May or something. And so that's why I was saying earlier, right? It's a good thing that Bitcoin found support above 74K, so that if the S&P does get another drop, it has a little bit, it has some wiggle room, right? We haven't really tested those levels yet. I imagine some bulls would step in and try to hold the line, at that 2021 high or even the 2024 high. So I'm watching that pretty closely right now. Obviously, there's no guarantees. There was also a bounce off this level in March of 01, and this just bounced in, March and April 2025, and ultimately led to a lower high. And that's what you got to be careful of, right? If in fact there is a recession. At the end of the day, though, the labor market, as it stands right now, again, I don't know what tomorrow is going to hold, but right now, initial claims are still pretty low. And what I'm sort of thinking, and I've said this for probably 3 years now, right? As long as initial claims are below 300K, then the labor market is still fine. As long as, and it's been under 300K for years, right? It's at 223K. As long as they stay below 300, I'm not that concerned. Whenever they start printing 300, it's probably a full-blown recession.
Mm-hmm. Yeah, and that's an interesting point as well. That we might be in a recession. Yeah, maybe as we speak, but and then in that case, Bitcoin would be doing or holding up quite well. I mean, it would be interesting to see what happens if we get sort of like a confirmed recession. If Bitcoin is then still sort of able to just hold its course. But yeah, that's just going to be interesting for sure, and nobody knows if this is going to happen. But I mean, let's assume that we are maybe, in a territory which is interesting to buy. You mentioned the DCAing, because I think a lot of people, or for most people, it's really hard to really time markets, probably for anyone. So, what are like some interesting metrics, that you usually pull up to sort of assess whether it's a good time, like risk reverse wise, to be stacking? Is there anything you can share with us?
Usually what I do is I buy Bitcoin when it's below, well, in in prior cycles, I have this risk metric, right, which is basically just the risk on Bitcoin. Because at one, after doing this for so many cycles, I got so tired of trying to make sense of what's going to happen based on the headline, the news, because that's really not a great way to invest. And even more so today, because I feel like the news is just, I mean, I can't even keep up with what's going on now. So what I used to do is I would just DCA Bitcoin whenever the risk was less than zero point 0.5, right? Whenever the risk is less than zero point 0.5, I would buy. I don't really care, what was going to happen tomorrow. I would just be like, look, I want to be optimistic. If it's below zero point 0.5, I'm going to buy. And you can see that so far this cycle, that's worked out pretty well, right? If you bought below zero point 0.5, you would have been buying throughout late 2022. And it then went above zero point 0.5 in July 2023, but then it came back down. So you would have been able to buy the dip. Came back down there below zero point 0.5 risk in September 2024, just for another rally. And now it's below zero point 0.5 again. This cycle, though, I've been a little bit more conservative. I basically, just weighted all my buys below zero point 0.4 risk rather than zero point 0.5. And the reason for that is because this cycle, I feel like the longer you're in crypto, the more risk averse you become. You're just tired of watching your portfolio go down 80%, 70% every 4 years. So you become more risk averse. You shy away from the altcoins a little bit more. You mostly stick with Bitcoin. And so for me, what I think makes most amount of sense for people is to just look at a chart like this and look at how nice it is to follow this thing, right? And to say, look, no one knows whenever the risk is going to be 0.2, and no one knows when it's going to be 0.9. But when it is 0.2, it's usually a great time to buy. And when it's 0.9, it's usually a great time to sell. And you just have to figure out what number is, makes sense for you to buy up to, right? For me, this cycle, I bought up to 0.4 risk. In prior cycles, I was always buying up to 0.5. I know plenty of people that'll buy up to 0.6 or 0.7 risk. And I also know people that literally only buy when it goes below 0.2, which makes it difficult because, they're basically buying once every 4 years. But if you're patient enough to do that and you can just wait all your buys for that period, it tends to work out pretty well. So I think this is what I use. I think people could use something very similar. But this is how I would navigate Bitcoin.
Yes, I see. And what do you say to people who say maybe if we see this range, between zero point 0.9 and then 0.2, I mean, it's quite a big range, but maybe some people are arguing with the entire institutionalization and everything of Bitcoin. This might be compressing in the future. Already now we've seen it hasn't even reached the level of zero point 0.9, and it hasn't gone down any more than 0.5. So is there any risk, so to say, from an investor point of perspective, that this will just compress, and then you never sell when it's too high, and you never buy when it's too low, and then you never get into the market again, so to say? So is there any thoughts on that as well?
Yeah. So if it's a left translated cycle, we probably won't go to the 0.9 to 1 risk band, right? Because that would mean the peak is in. What I do is I do something called dynamic DCA, right? I don't wait for 0.9 risk to sell anything. I buy up to 0.4 risk. So I buy up to this level right here. I don't do anything between 0.4 and 0.6. I don't do a thing. I don't buy, but I also don't sell either. Above 0.6, I will sell a little bit, right? Like I'll sell some. I'll sell, 1/10 between zero point 0.6 and zero point 0.7, and maybe like 0.2 between zero point 0.7 and zero point 0.8, right? So that if the market, like if you look at 2019, Bitcoin went up to the zero point 0.6 to zero point 0.7 wristband, and then it dropped 75%, right? So like in those cases, it doesn't always make sense to just watch that rally come and go without taking anything off the table. So if you sell a little bit, while it would still be somewhat painful to watch Bitcoin drop 75%, at least you didn't let any rally go to waste. And that's why I say, like, don't let a good bubble go to waste. Anytime you buy Bitcoin and it's up several X, right? If it's up 5X, 6X, right? Like, it's generally a good time to at least take some profit. That way, if there is a 70% drop or something, you can use the proceeds of that to then buy back in and then try to gear up for another rally. So I think the way that you navigate that is you don't wait until 0.9, right? Like you dynamically do it where if it goes to say 0.6 or zero point 0.7 or zero point 0.8, you sell increasing amounts, right? So a lot of people, what they do is you mentioned DCA, right? They DCA in, but then when it comes to selling, they just want to sell the top and nothing else, right? Like they want to time the top to the day, and anything less than that, they feel like a failure. But I think that's not right? I don't think anyone can really, find, at least consistently know where the top of the market is. And so I think just kind of skimming some profits off the top as we are in those euphoric periods makes a lot more sense. That way, when the market cools down like now, if you were 30% cash, it gives you some flexibility, right? Like you can be the person bidding up Bitcoin at the 2021 high or something and trying to, hope that the market cycle continues. But if you're just the person that was all in December or January, then you don't really have anything to buy Bitcoin with. You're just sitting there hoping that it goes back up, right? So it's all about how do you get yourself in a position of strength and how do you just avoid being in a position of weakness.
Yeah, no, for sure. But maybe one more question in terms of this graph that you're showing us here. I mean, how is it constructed? Because I'm just wondering, like, again, if a lot of people argue, okay, because of these institutions that are moving in, the price will never go below a certain threshold because they will be the buyers, because they're seeing the opportunity in Bitcoin and they want to stack when it's sort of cheap. Yeah, would that mean that if the price doesn't move that low anymore, so to say, that this risk metric will also not go lower, or is it not really correlated to price? You know what I'm
It is
trying to
correlated.
ask here?
Yeah, it is based on price and volatility, and it does account for diminishing returns from one cycle to another, which by sort of in the same way, it accounts for diminishing losses from one cycle to another. So I think the argument is that it theoretically is supposed to account for that. I also don't fully buy into the ideas that like, there's a floor for anything because anything can happen in the markets. I mean, I was in the market in 2020 and we all went to sleep and Bitcoin was at like 10K or like 8K or something. And we woke up and it was at like $3,800, right? Like, at the end of the day, anything can happen in markets. And, even though like makes sense, the markets don't have to make sense, right? Like sometimes you just get these like nasty liquidation cascades in both directions, right? Sometimes you get, a cascade to the upside, right? Where all the short are getting wrecked. So remember, markets don't always have to make sense. Just because it doesn't seem that Bitcoin should be at a certain price doesn't mean it can't go there. So I wouldn't put a lot of faith into the idea that like it can't go below a certain price or it can't go above a certain price. I would just say, whenever it does go to these prices, you need to have a plan, right? And so for me, it's below zero point 0.4 risk, I buy, above 0.6 risk, I start selling. But I certainly don't sell everything.
Yeah, for sure. Okay, yeah. Quickly shifting gears a little bit, you've been talking about Ethereum going home. What did you mean exactly by Ethereum going home? And it actually did go home, if I'm informed correctly, right? But if you could explain what you meant by this, that would be great.
Yeah, basically what I mean by it is that like every cycle, Ethereum goes to its lower logarithmic regression trend line. So basically, I created this regression band in, I believe it was in 2019. And I noticed this pattern with Ethereum where it would go into these bubbles that are somewhat irrational, right? They're just irrational. It's hard to make sense of like why it's going that high. Obviously, you can just blame the money printing, right? That's probably the reason. But it was sort of like an irrational time. But then you can also see we return to sanity at certain points in the cycle, where the market more or less goes to what I would consider to be sort of the fair value of Ethereum, right? But because we'll spend so much time at higher prices, it always feels like the fair value is lower than it should be, right? It feels like that because we'll spend years, where the price is like several thousand% above what the fair value even is. So basically, what I thought was that in order for ETH Bitcoin to bottom, right? In order for the ETH Bitcoin chart to bottom, if we overlay ETH Bitcoin with ETH USD, you can see that every cycle there's a period where ETH is going up, right? But while ETH is going up on its USD pair, it's bleeding on its Bitcoin pair, right? It's done it recently in the last few years. It did it in 2017, 2018, and early 2019. It also did it over here in 2016, right? But in order for ETH Bitcoin to bottom, we have to see a big pivot in monetary policy, right? And at the very least, we need to see quantitative tightening end. In fact, if you overlay the assets held by the Federal Reserve last cycle, it was exactly when quantitative tightening ended. That's when ETH bottomed against Bitcoin, was when QT ended. Now, quantitative tightening still hasn't ended yet, right? So what I've said for a long time is that, if you're an ETH bull and you're looking at this chart and you're celebrating it, right, as it's going up, I was like, look, I have bad news because you're celebrating something, but there's something really sort of bad going on. You're celebrating ETH going up on its USD pair. But as long as ETH holds support on this trend line, it means that the consumer is holding up relatively well, right? And if as long as it holds support, there's no reason for any major monetary policy pivot as long as it holds support. When it breaks support, it means the Fed is they're finally starting to sort of tame the animal spirits, right? They're taming the animal spirits. And so what it means is that there's likely going to be a pivot in monetary policy. So look at last cycle, right? It was not until after ETH USD broke this structure, it was like a month or two after that when QT ended, right? That was when QT ended, ETH Bitcoin bottomed, and then it took a little while, right? But eventually, ETH USD started going back up again, right? But in order for ETH Bitcoin to bottom, ETH had to go home. So ETH had to go where a lot of ETH bulls didn't want it to go. But you could argue that this was always necessary to give the Fed a reason to pivot and allow alt Bitcoin pairs to eventually bottom. Now, again, they still haven't ended QT yet. So until they do, alt Bitcoin pairs will likely go lower. So right now, this is my interpretation. I could be wrong, right? But my interpretation is that the fair value of Ethereum is around $1,600, right? Because you can see right the ETH logarithmic regression band, the fair value is around 1,600. The lower part of the band is around 1,100, and then the higher part of the band is around 2,400. So this is what I meant by going home, was going to that fair value logarithmic regression trend line, which is right around 1,600. And I mean, it's possible that it's already, that it doesn't go lower, but just remember, there are plenty of examples where it can, go as far as that lower logarithmic regression trend line. And if we get a recession, like a full-blown recession, it always could, temporarily go below it. But you just have to keep that in mind, that if you do see Ethereum kind of hang out in here, if history repeats, it could be a good opportunity.
Yeah, no, for sure. And obviously, as I understand you, it's not that the Federal Reserve is sort of looking at Ethereum and just like, okay, now Ethereum has bled enough and now we have to sort of end QT, but it's sort of that Ethereum almost kind of mirrors the entire risk on market like perfectly, to the extent that it's just a great sort of indication, maybe even a leading indicator for TradFi, so to say, then, or is that too far to say?
So yeah, I mean, yeah, no, I think you're right. I mean, like, basically think about it like liquidity is slowly drying out, right? Because the QT has been going on for a long time, and also rate are arguably above R star, the neutral rate. And so, people are starting to feel the pain. But higher risk assets get hit first, right? So this chart is others divided by total 3 minus others. Now, others is basically everything outside of the top 10, all the way up to maybe like 125 or something. So what we're looking at on this chart are smaller market cap altcoins relative to higher market cap altcoins. So they broke down in January, right? So first, the altcoin market got hit, and if you probably remember all the meme coins on Solana, right? They were tanking back in January. So first, the higher risk altcoins take a hit. The liquidity's gone, right? The liquidity dries up. The high risk stuff bleeds against the lower risk altcoin. So first, high risk alts bleed. They break down against lower risk altcoins, which is what happened here. That is just before ETH broke down, right? So the liquidity dries up with higher risk stuff first, right? And then ETH didn't break down until about a month after lower market cap alts did. And then it just sort of works its way down, right? So the low hanging fruit gets picked first, right? Like that's the stuff that's easy to go. The meme coins and all the scams, right? The rug pulls. People start losing faith in that pretty quickly, right? Eventually, as long as monetary policy doesn't change, then it gets to the higher market cap stuff, right? Then it starts to affect things like Ethereum. If it continues to go on, and there's still no pivot, then it can certainly start to have more adverse effects on Bitcoin, right? So you have to think about it. It starts at sort of the low end of like the higher risk stuff, and then it sort of works its way down. But because Bitcoin is sort of is the best asset in the cryptoverse, it holds up longer than essentially everything else.
Mm. Yeah, and some people might be arguing that Bitcoin, to some extent, has some real fundamental value in the sense of like real TradFi institutions are buying it by now, and that makes it a little different. Because that's one thing I would like to ask you as well in terms of Ethereum. There is this current notion where some people say, well, Ethereum is just fundamentally overvalued, and you're looking at this, as I understand it, from a purely like technical perspective. Okay, Ethereum is in the fair value zone, so it might be time to buy. But then others might come in and say, because Ethereum hasn't managed to get any real world traction with its DeFi and stuff, it's still like fundamentally overvalued because it wants to be a network with a lot of transactions. And for this, Ethereum can't be high. And you have like the Ethereum Solana debate and everything. So what is your view? Or do you have a view on this? If that also filters into this, it's like, yeah, it might be technically fairly valued now, but maybe it's still fundamentally way overvalued.
Yeah, well, fundamentally, I mean, a lot has changed for Ethereum over the last few years, right? It transitioned from proof of work to proof of stake. That's a big change. You could almost argue that it's a different asset today than it was back in 2021. And back in 2021 and 2022, I got into a lot of fights with ETH maxis because I said that ETH Bitcoin is likely going to bleed for a few years. And the reason they gave for it not bleeding was because they're like, well, look, it's going to proof of stake. This is a good thing. The issue that I have is the proof of stake model. Like, I don't even think it's fully been tested yet. And the reason, and the full value of it isn't known yet. And I'll tell you the reason. It's because the rate, like the interest rate you would get by staking your Ethereum, and a lot of different proof of stake networks, right? It's not just Ethereum. You can go down the list and look at a lot of layer ones that give you reward for staking your crypto asset. The problem is that in a lot of cases, the interest rate that you're getting is actually lower right now than what you can get in a T-bill or a CD or a money market account. So for a lot of investors that might find, generating yield attractive in that sense, it's hard to put it, at least for the last few years, it's been hard to put it in Ethereum when you can get the same return by putting it in a T-bill, right? And so what I think has to happen, and it has been happening, right, is that the yield curve, right, the yields need to ultimately come down. So if you look at the 2-year yield, you can see that it's been bouncing off of this level about 3.5% for years. But my guess is that if it were to go down here, right, if the 2-year yield were to drop below this level, frankly, it would likely be due to a recession, if we're being honest, right? It would probably be due to a recession. But look, at the end of the day, I know the recession, right? Like the R word is scary for a lot of people. And it can be because a lot of people do, they get laid off, and that's a scary time. But recessions also there are silver linings to them, right? They help get out all the filth and the stuff that's not productive and not improving society. It gets all that stuff out of the way. And so then capital can then be better focused on assets that are actually do improve society, or businesses that do improve society. And so my guess is that whenever yields go down, proof of stake network will become more attractive for certain investors, and that might lead to more investment. The problem with Ethereum for the last 3 years is that, it's a risk asset. It's bleeding against Bitcoin. Yes, you can get a yield on it, but why not just buy a money market to get that same yield? And also, by the way, you don't have to worry about the downside, So I think that's been the fundamental driver for why Ethereum has been doing so poorly. Whenever yields break down, it'll probably be due to a recession. But on the other side of that, you might see Ethereum do really well.
Mm-hmm. Yeah, I mean, my question was probably hinting at the fact that, like, sort of, or the question was sort of, how do fundamentals really, like, play a role in crypto? How is it, like, because, like, it feels like, as you said, maybe it's just the liquidity driving all of this, and then, as you said, if yields were to drop lower, and then we get a recession, but at the other side of this, we maybe get also some money printing then again, and liquidity increases, and that's then really what drives all of these other altcoins. But just really asking, like, how do fundamentals really matter in crypto? Do they even matter at all?
Over the long term, they do. In the short term, they often don't matter at all, right? In the short term, it can be momentum. Depending on the market cap, it could be, what influencers are talking about that altcoin, right? If a lot of influencers are promoting it, there's a good chance, it could get a rally. On the downside, it usually gets rugged a few days later. I do think fundamentals matter. I think there's a lot of altcoins that, for being honest, like 99.999% of the altcoin market, the fundamentals are absolutely garbage. And that's the reason why you see altcoins kind of come and go. And there's always sort of this cycle of new altcoins coming in, because a lot of them just don't really have great fundamentals. Ethereum has at least been in the top 2 or 3 for basically the last decade almost. Bitcoin has been number 1, right? Since 2009, right? Since it was created. But you can't really say anything else about a lot of the other altcoins. There's a few others that have been up there for a long time, but a lot of them kind of come and go. So I do think the fundamentals matter. I really value decentralization, right? So I really value decentralization. And I think Bitcoin and Ethereum are the 2 most massively decentralized protocols out there. But listen, at the end of the day, a lot of these blockchains, it's the blockchain trilemma. It's an engineering problem, right? Where you have to optimize between decentralization and security, and well, there's several different things, right? But the problem with security is that some blockchains will then sort of focus on making sure that they're secure, which is not a bad thing, but a lot of times they'll do it at the expense of decentralization. So you'll see some blockchains, they'll only have like a few validators, right? Like, or the only way to become a validator on their chain is to be an insider, or to have, a ton of money that you can put on it, because otherwise you're not gonna get rewards anyway. So there's some that only have a few validators, a few nodes, even securing the network to begin with. And so it's not very decentralized, right? It's not very decentralized, but for them, it feels more secure because the people that created the blockchain, they're all in control, right? So for them, they feel like it's super secure. They don't care about it being decentralized. I think decentralization matters. And that's why I think a lot of people like crypto. But there are times where I feel like we lose our way and we start valuing other things more, and then more centralized things start outperforming the decentralized thing. But I would argue that over a long enough period of time, the decentralized stuff actually wins. And so, yeah, you have this blockchain, the blockchain trilemma, where you're essentially trying to optimize between decentralization, security, and you also have to scale, right? You also have to scale as well. And I've looked at a lot of different blockchains. Some of them, they just want to scale, right? They want to scale. Solana, back when I looked at it really closely back in 2021, the blockchain, I believe, was growing at like terabytes a year, right? When I looked at running a validator on it, it was going to be extremely expensive to run it. Way more expensive, but it had upsides, right? And it was very fast. It was very, very fast compared to other blockchains, but it was, taking hits on other areas. So again, it's all about how do you optimize things. It's an engineering problem. And some blockchains will come out and say, oh, look how fast we are, or look how secure we are, but then they're not decentralized. And then other blockchains might be very decentralized, like Ethereum, but during really euphoric times, the gas fees are sky high, So again, it's a trilemma. They're trying to solve it. I do think the fundamentals matter over a long period of time. In the short term, whatever.
Yeah, no, I see. Great. Well, I mean, one last thing I wanted to ask you is about the Bitcoin dominance, because you mentioned it as well. And probably everybody has been asking this question for quite some time. What needs to happen for Bitcoin dominance to really meaningfully reverse? Is it contingent on a potential Ether Bitcoin bottom? And if so, what are like the best confluence factors to look at?
I think quantitative tightening has to end is the answer. I mean, last cycle, Bitcoin dominance went up until quantitative tightening ended, right? That's what happened. And when QT ended and QE began, that's when Bitcoin dominance topped. And yes, it technically whipped above it a year later, but for all intents and purposes, like that was the top for Bitcoin dominance, right? Like if you said here in September 2019 that Bitcoin dominance topped, there was only like one day for the rest of the cycle where technically you were wrong, But every other day, dominance was lower than that level. So there's no guarantee, by the way, that QE starts just when QT ends. But I would say that in order for Bitcoin dominance to top, quantitative tightening has to end. And, I don't know exactly when that's going to occur. If you read the Fed minutes that were released on February 19th, the average view by the Federal Reserve participants is that they'll end runoff about mid-year. It could be summer 2025. I don't know exactly when, but that's my guess is that QT has to end for Bitcoin dominance to top.
Mm. Yeah, which, as you said yourself, doesn't automatically mean that QE will have to start, and that's obviously something people have to keep in mind as well. Yeah, well, then, yeah.
One counterpoint is you don't have to have QE for all Bitcoin pairs to go up, because in 2016 and 2017, I mean, you can see that Bitcoin dominance was dropping while the balance sheet of the Fed was basically flat, right? I think that you could get a big rally by alt Bitcoin pairs, and you could get a big dump by Bitcoin dominance just if they were to end QT, right? Like just get the wind from blowing in the wrong direction for them. But for now, as long as the wind keeps blowing in that direction, alts are likely going to keep bleeding against Bitcoin.
Mm. Yeah, no, I see that point. I mean, we've had these like fleeting rallies of some altcoins also, even like last year, it just quickly, but then it just faded really fast. And in the end, as you're saying, it's just sort of a mental model that helps people to think about it. If we were to get QE at some point, then maybe, yeah, we could go back to a real proper altcoin season. But if not, then yeah, it's probably just not as extended as we might know it from the past, which doesn't mean that some altcoins could be performing well under any other circumstances. But that's definitely something to keep in mind as well. Yeah, I think that's pretty much it, Ben. Thanks a lot for sharing all this information with us. Any last words, or are we good at this point?
I think people just need to have a plan and stick with it, and that's the way to ultimately be successful in crypto. I think the people that do best in crypto are the people that, they come in, they buy, and then they forget what they have for the next 4 years, and they just don't even think about it. That's usually the way people do well. So just have a plan. Try not to make too many emotional decisions based on the news. And, when you look back in 10 years, it'll felt obvious, but in the short term, it's always scary.
Yeah, no, great advice. That's certainly something I can attest to as well. So thanks a lot for doing this, Ben. Have a great one, and just see you around.
Thanks, Joe.